My name is Mark Couchman. I'm president of Silverado Premium Properties. My job is to assist and direct investment dollars that are directed towards California wine grape vineyard investments. I got started in this business because I grew up in agriculture and I was always interested in investments and agriculture. I spent quite a bit of time working in commercial real estate, learning kind of the ins and outs of investing in real estate properties. But I always had a hankering to get back to the land. And I have a degree in agriculture economics and an MBA. And when I was working in commercial real estate, I came across a number of pension funds and other large investors who I felt might be interested in investing in this type of assets. So in 1997, I hooked up with some local Napa players and we formed a company and raised some capital, and that was the beginning of our venture. My company oversees a fairly large component of vineyards in coastal California and some in the northern part of the Central Valley. The number of acres under vine is north of 20,000, and we're growing that acreage. It has higher values in places like Napa and pretty normal values in places like Lodi. A vineyard is valued based on its potential earnings. Its potential earnings are a function of the price of grapes. The price of grapes is a function of the price of wine. So as wine prices go up, generally then wineries are able to pay more for grapes. And when they can pay more for grapes, that value ultimately ends up into the value of the vineyard. When I got started in this business, there were not as many people interested in investing. We started out with some private equity investors, but we moved from there to institutions rather quickly. But I have to tell you, I spent a lot of time in Manhattan, in a lot of offices, talking to a lot of people, trying to explain what I was doing. And there were plenty of discouraging days when everybody would meet with you and they'd want to talk about wine, and I want to talk about a vineyard. But at the end of the day, I think when we started working with the longer-term view institutional investors, the connection with the land was very important. I think people view land as a safe place to be, and they view it as a place where there's only so much downside. Everything on top of the land can have some risk, but the land underneath, if it's in the right location with the right water, it's probably going to hold its value. If you look at agriculture in general, most agriculture is a commodity that gets priced, if not every day, certainly every year. And I saw the opportunity to say we're in a stable, long-term growing demand for wine, but also wineries were willing to sign long-term contracts, which gave me the ability to go to the investors and say, look, your risk here is that I've got to be able to produce it. But once I've produced it, I've got somebody who's going to take these grapes. And therefore, our revenue in the long run, there's going to be variability based on annual crop yield, but we're not going to have the price risk that you might have if you were growing corn in the Midwest or even almonds in the Central Valley. There's always competition in our business, and there's always folks who are looking at what we do and trying to figure out how they can do it or do it better. We welcome those folks. Quite frankly, it's kind of nice to have other people coming into the business because it gives me a chance to tell my investors we're not the lone wolf here. Others are doing it, and when we outperform them, that's even better. And so far, we've been able to do that. In terms of the demand for wine, we really lived off the baby boomers for many years. And their trajectory was quite clear. They started out with beer, they moved to low-price wine, and then over time, some of them moved to higher-price wine. The millennials have shown a desire, to pay more for experiences that are different. They're much more willing to try new things, and they're willing to pay for those experiences. They love bold flavors, and so that's making higher-priced wines sell much more readily. It also means that they're probably less loyal because they're always willing to try something new. And if an Australian wine shows up or an Italian wine shows up and it's bold flavored and it fits to their liking, they'll be happy to buy it. So it makes our life more competitive, but we are doing very well with our higher end wines. I think it's very important to have a good, solid business understanding of what a profit and loss is all about, how to understand what's going on in the vineyard. The vineyard is where everything starts, and you need to understand that. You don't have to be an expert, but you need to understand that. Winemaking is a skill that's important if you're going to make wine, and you can develop that and acquire that. But I really encourage people to understand what's going on in the vineyard. What allowed us to succeed in this business is a focus on being able to produce operational returns. You have to be able to deliver cash flow, and you need to deliver it fairly soon in the life cycle of your investor. And we have had a more balanced approach to have operating vineyards and development vineyards. And we've seen investors come in who focus purely on development. They tend sometimes to spend more money because they're very focused on just high quality. We love to buy the vineyards from those people because we get a high quality vineyard after they've overspent on it. But I think it's very important to focus on the operational returns. I think it's important to have skill sets in this business that really start in the vineyard. It's really important to understand where the product comes from and the difficulties and challenges of growing a good quality grape makes it much easier to make a good quality wine. So understanding those complexities, getting some time in the vineyard in the young part of your career is really important. I think it's fair to say that we brought more capital into the California wine grape vineyard than I've seen anyone else bring. We operate at a large scale, and the value of that vineyard holding is considerable. And every one of those vineyards I acquired in the last 20 years. And of course, when you do that, you make some mistakes. They're not all winners. You just hope to have more winners than losers. In 2008, when we went into financial difficulties as a country and as a world, people pulled back on their willingness to buy higher priced wines. Now, we're sitting in Napa County, but our company also invests in the Central Coast of California, where wines are priced at a more moderate level. In California, wineries will buy wine at many different levels. And so we're always able to shift high-priced wine to a lower price level if we have to. That's not our desire, but during the tough times we did some of that. And it allows us to harvest cash and maybe not be as profitable for a while, but we survive it. I spent a lot of time working on my team of people in the office that work with me and my vineyard managers. And we are very focused on keeping our costs under control. Operations is an area of focus that is really important to me. And it sets us apart from many of the other players who've tried this, who have focused kind of on just the development or just buying existing and hoping the price goes up. I look at this as you got to make money every year, and that means you've got to be efficient. And we farm in a fairly large scale, allowing us to be very efficient. In 2005, we had a very, very large harvest, and we could see that coming early on. We were also in a market that was already somewhat glutted with grapes. So we formed a company that was able to crush the grapes and make wine, and we started to make bulk wine, which then allows us to take a perishable product and create something that can be stored. Red wine can easily be stored up to 2 years with losing no value. Our primary goal was to store the grapes in the form of wine and sell that over time in a much more orderly fashion. But at the same time, we realized there were other opportunities, and so we started providing wine to certain private label customers, supermarkets that were looking to have their own labels. And then we developed opportunities with what we call virtual wineries, people who own labels but don't own facilities. And so that became the next opportunity. When I look at my metrics in my business, I focus very much on what my costs are. I want to make sure that I'm staying within budget. And I spend a lot of time building those budgets at the beginning of the year so I know where I need to be. And when we start getting out of bounds on any certain category, we focus in on that and try to figure out what we can do to get back into bounds on those. The revenue side usually takes care of itself in our business, but the cost side is where things can get out of control very quickly. The toughest moments are actually those years when the yields don't show up. The toughest moments are when you have to explain to the investors that you didn't make any money that year. The experienced investors understand that that's a 1-year time frame. And generally that means prices are going to go up the next year because there's less grapes available and people compete harder for them. But those are the toughest moments to explain that. They tell you that they're interested in the long-term investing, but the annual returns are very important to them. In the vineyard, what's changed is the cost of labor. And that's a dramatic change, and we view that issue as an ongoing change. That means we've got to mechanize. And so even in the 20 years that I've been actively involved in operating vineyards, we've seen more and more mechanization, and we're looking to do even more. We've certainly moved from heavily hand-harvested vineyards, and there's still many that are, but the vast majority of grapes in California are picked by machine. Now we're building all of our new vineyards that aren't on a hillside. This is an exception, but the vineyards that are on flat ground are all set up so they can be mechanically pruned, because our big cost in running a vineyard is the pruning and handwork that goes into managing a vineyard. And those labor costs are going up, and the availability of labor is. I view in the next 20 years, vineyards will become almost entirely mechanized. And if you look at other models in agriculture, same thing is happening. There are orchards in California where you never put a footprint in the orchard after it's been developed. It's all mechanized. There's a couple other large growers in the north coast of California, but by and large, I would say we're one of the few that does it in this scale in Napa. Most people in Napa are looking for an existing producing vineyard. There's a number of wineries who buy properties from us, but they want to buy them when they're fully producing. And we also have some other investors, but they don't want to take the risk that we've gone through here in developing the vineyard. So I would say in Napa County, it's become much more difficult to develop. Our restrictions and regulations are getting to be very strict, and the time horizons are getting longer and longer to get approvals. So we have done this for a number of years, and in a way, our expertise is growing, and others who don't do it are, quite frankly, very wary of doing it. And we're wary as well, but we're still willing to keep doing it. And we've learned newer techniques. We can try to prune vineyards later to have them come out later in the spring, so we reduce the threat of frost. This vineyard that we're sitting in has a rootstock we're using that allows for slightly earlier ripening, so we can get the grapes off the vine sooner in the fall. So there are some things we are learning to mitigate risk, but the risks are still there, and they're considerable. We're very active looking at new opportunities to invest, and so we're always looking to buy. Our targeted investment is a tired vineyard that needs to be replanted at the end of its life cycle with an owner who's chosen to retire. And in California and in the world, the aging farmer is really an issue for our country, because there's many farmers who are retiring, but their kids have decided they're not going to be in the business. Unfortunately, in my view, that does mean that land will ultimately end up in the hands of professional managers like myself. And I only say that unfortunately because I come from a family farm, and I think it's part of the lifeblood of our country, but this is what we're faced with. We occasionally do sell vineyards. We don't sell a lot of vineyards because our investors tend to enjoy owning them, but occasionally we will sell a vineyard, and 9 times out of 10, the vineyard is bought by a winery who wants to acquire their own production. And that usually means they buy a vineyard when it's fully producing. They love to buy it in its younger years, and sometimes that's what we sell them. But generally, we're a long-term holder. When I think about the accomplishments that I've had personally, it's the team that I've built. The people that work closely with me that oversee the vineyard managers. So it's the folks that I've been able to add, people with deep experience in the industry, but had a desire to be entrepreneurial. And in each case, I gave each of them a piece of the action. That got them excited. And then to choose the right vineyard management companies to work with. And that's been very important. And every one of these people have stayed with me, and every one of these managers we continue to have and build with. They all bring different skills, but they're all important. The regulatory environment in California continues to get tougher and more strict. In Napa County in particular, we have faced an increasingly high hurdle for developing new vineyards on hillsides. Those restrictions are coming mostly from environmental pressures to not silt up the stream, not cut trees, not disturb habitat for red-legged frog, which we have here in the surrounding area, for swains and hawks, who we have here in the surrounding area, for the Contra Costa Goldfield wildflower, which we have here, and a number of other either threatened or endangered flora and fauna. All of those flora and fauna need to be studied for 2 seasons before we're able to complete our environmental impact report, which allows us then to put together our erosion control plan, which then gives us the permit to plant the vineyard. When we were evaluating buying this property, which is on a hillside in a sensitive area, we anticipated 3 to 4 years of studies and putting together the EIR. It took us 5 years, so it took us 1 year longer than we anticipated. All that had to be calculated into the potential rate of return that we expected to get. So we literally owned this vineyard for 5 years before we were able to plant the first vine. The property was 5 years old in our ownership. Now we've got to wait 3 more years to get a commercial crop. And so we would not have been able to do that if we didn't have a fairly large scale operation operating with other vineyards that were throwing cash flow at the meantime. And that's given us the cushion to do a project like this. And it allows me to tell the investors, this is a higher risk project, but the rewards are going to be high. And in the meantime, you're still getting good cash flow from the other vineyards. It's definitely still possible to start your own company. California is a wide and varied place. Napa Valley is the creme de la creme in California. There's wonderful opportunities on the Central Coast. I see really interesting wines coming from Paso Robles. I see very interesting wines coming out of northern Santa Barbara. At the same time, Sonoma has some still undiscovered areas and undiscovered varieties. And I think to try to just do the same what everybody else has done, that could be difficult because it is a big game. We see new startups all the time, but they tend to be focused on niches that are a little different, and they can provide something to the consumer that's new and different. I think one of the things that I would like students to be aware of is it's not a bad thing to start out with a job where you may not make a lot of money, you may not have a high position, but you're learning. The most important thing in the early parts of your career is to get exposure to new things and to learn. Find a job where you're going to get exposure and you're going to get experience. That's the most important thing. You will find that will build from there. And people will want you once you build that experience. And so don't be afraid to take that first job that doesn't look so glamorous, but you know it's going to give you the experience.